President Trump announced a new 25% tariff on imported automobiles and light trucks, aiming to boost domestic manufacturing and generate substantial revenue for the U.S. economy. Speaking from the Oval Office, he emphasized that vehicles built in the U.S. would be exempt, a move he believes will spur significant economic growth. The tariffs will take effect on April 2nd, with duties being collected starting the next day. Trump estimated the tariff could raise between $600 billion and $1 trillion over the next 2 years. The White House Staff Secretary Will Scharf provided a more conservative estimate of $100 billion in revenue. In addition to tariffs, Trump reaffirmed his plan to make auto loan interest tax-deductible, but only for U.S.-made cars. However, tax experts note that such deductions mainly benefit high-income earners, offering little relief to low- and middle-income Americans. The stock market reacted negatively, with shares of Ford, General Motors, and Stellantis declining after the announcement. Tesla stock dropped nearly 6%, as investors worry about the impact of the tariffs and CEO Elon Musk's connection to Trump's administration. The American Automotive Policy Council (AAPC), representing major U.S. automakers, voiced support for the administration's goal of increasing domestic production but cautioned that tariffs must be implemented carefully to avoid raising prices for consumers and disrupting the North American auto sector under the USMCA trade agreement. Trump has long championed tariffs on auto imports, believing they will pressure automakers to shift production to the U.S. However, many U.S. plants rely on foreign parts and vehicles from Mexico, Canada, and other nations, making an immediate shift difficult. Analysts predict that in the short term, car prices could rise by as much as $12,200, potentially reducing sales. Economist Paul Ashworth warned that while the policy may eventually stimulate domestic production, in the short term, it could drive up inflation and make new vehicles less affordable. The decision has already strained relationships with key U.S. trade partners, including Canada, Japan, Mexico, South Korea, and the European Union. European Commission President Ursula von der Leyen criticized the move, stating that tariffs hurt both businesses and consumers and vowing that the EU would seek a diplomatic resolution while protecting its economic interests. Despite opposition, some groups support the tariff. Scott Paul, president of the Alliance for American Manufacturing, argued that U.S. auto production has been eroded by foreign competition over decades, and the tariff is a necessary step to rebuild American industry. United Auto Workers UAW President Shawn Fain echoed this sentiment, suggesting that the tariffs could lead to thousands of well-paying auto jobs returning to the U.S. within months by expanding operations at underutilized plants. The impact of these tariffs remains uncertain, with potential benefits for domestic job growth but risks of inflation and strained trade relations. Will Trump's strategy pay off, or will it backfire on American consumers? Share your thoughts in the comments. Like, share, and subscribe to Daily Times for more news updates.